China's GDP not living up to those rumors we were talking about yesterday. Aaron Beck here to talk to us about this. And Aaron, exactly where did China's GDP come in and what's this mean for global economic growth?
So China's GDP came in at 8.1% growth, which sounds pretty good to us here in the U.S.
Yeah,
but it's down
on
from
2%.
8.9% last quarter. And the whisper number around Wall Street yesterday was that it would be close to 9% growth. So kind of fell short of the rumors, and that's part of why the markets are down today. I think it's nothing to be very alarmed about. I think China's still firmly in soft landing territory with this number, but it may feel like a hard landing to some sectors, like people who sell iron ore and raw materials to China.
Go ahead.
Oh, I was just going to say, where is the slowdown in China exactly coming from? Is that clear, or is that unclear?
Well, it is pretty clear that the property market in particular is a huge driver of economic activity in China. Construction of apartments and things like that. And the government has basically forced a slowdown in that sector, is trying to force prices down. They've been doing it for more than a year now. And I would say that's the biggest factor driving the slowdown in China right now.
And, that's obviously going to have implications for the global commodities market. As you mentioned, iron ore, the other raw materials that go into manufacturing some of the construction activity. Is that going to affect global growth? I mean, are we going to feel the implications here in the U.S.?
Yes. The Chinese economy has been one of the crucial supports for the global growth for the past few years since the financial crisis. I think the hope is that now the U.S. is coming back a little bit, and the Chinese are hoping they can pass the baton in terms of supporting global growth. But it's definitely going to have a global impact. It already has. The Australian dollar moved down after this data came out. The Australian dollar is very sensitive to demand for raw materials
because, of course, Australia is a big producer of iron ore and the other raw materials.
Exactly. So, I think the U.S., of course, runs a trade deficit with China. I don't think we're going to be the most impacted. I think the people who are really hurt by slowing Chinese growth are going to be commodity exporters like Brazil, Canada, places like that.
How about the housing market problem in China? I mean, do they kind of control the way construction in that market can grow and can boom and bust? I mean, we obviously saw the damage it's done in the U.S. and Europe.
Right.
When those markets collapse.
Yeah, so what they've done, they also saw what happened in the US and Europe, and they felt maybe we have a bubble on our hands, and they decided to prick it, basically.
Okay.
And it's pretty draconian. There are 30 or 40% down payment requirements now to buy an apartment. There are outright limits on buying second and third apartments in some cities. You can't do it. You can only buy one in certain cities. So those limits were put in place, over the past year or two. And they're now beginning to really have an impact on apartment construction and things like that. So the betting in China, everyone wants to know, when are they going to lift these controls? And presumably, if things get really bad, then they will.
Mm-hmm. Well, Aaron, though, when you look at it, we were looking for a number closer to 9%, got one a lot closer to 8%. You're still talking about some pretty explosive growth.
Yes, and it's an objective of the Chinese government to slow the rate of growth. And I think that this slowdown is the result of government policy in the property market and elsewhere. So I don't think it's anything to really be alarmed about yet.
Engineering the soft landing. Aaron, thanks very much for bringing us up to speed on what's going on with the Chinese economy.